I want to do a trade review of an old member of Z Trades who sent me a message. Let's see what he says. And I'll show you why he got in. Hoping these turn out well. Buy signals are always good as long as they stick, lol. Now this guy, I've watched this guy make a lot of money. He goes heavy, very heavy all in on on the position that he takes. And a lot of times he's playing earnings. Now, if you do this and you're following unusual options activity and dark pool and you do get lucky, overall, you're still not going to be, maybe on that trade, you're going to be green, but the next one, you're just going to give it all back. There's ways to do this with risk management. Let's say you got lucky. Well, you could use the profit from the last trade only while preserving your initial capital if you want to gamble on the next trade. Now, there's nothing wrong with gambling and trading and playing earnings. No one has a problem with anyone going to the casino. Oh yeah, have fun, right? As long as you know you are gambling and you're probably going to lose your money in the long run. In the long run, the grand scheme of things, you're going to lose your money, right? So let's go ahead and take a look at this. I just want to pull up PayPal in general. It's been on my radar recently. Here's the position he was in. So he got in this, let's see. He got in this based off earnings over here, or based off, they were having earnings, and he also saw dark pool prints come in. Now, I've seen a lot of wild stuff with stocks going crazy after there was dark pool prints. So basically, in layman's terms, this is coming in privately. This is money coming in, heavy money coming in privately, in layman's terms. I can explain dark pool, and I'll do a video just for dark pool and another video, and I can explain unusual options activity and another video. So based off this, he went heavy on earnings, and he bought 100 contracts, and he put $4,600 in it. Now, what's the probability of winning? Very slim. You can follow dark pool prints. You can follow unusual options activity. There's going to be heavy calls and there's going to be heavy sells, puts as well before earnings on stocks. Also, I've seen lots of calls come in and dark pool and the stock not do anything, right? And that's when a lot of people are like, hey, the market's rigged. This is all just gambling. No, you're wrong. It's probability. And the probability of winning on earnings with the premium crush and the expiration and the IV, everything's going against you, even if the dark pool and the unusual options activity are going for you. So let's take a look at PayPal, right? During crashes, when there's big pullbacks. This was in, we had 2018. Let's go to the max here. When was 2018? February. Anyways, we cut interest rates. And so let me back up here. There is a reason he's getting in. I like that because a lot of people, they can't tell you why. Every option I buy, no matter whether it's a call or a put, which is going to be my next trade review video, whether it's a call or a put, I always lose money, people will say. I'll ask you first, why'd you get in? Why'd you get in? What was the reason? Was there something going on with the stock that was going to drive it up? Did they have an event? Do they have good news out? Is there upcoming news? Why did you get in? And you know what? A lot of times people are like, it's like, well, there's your first problem right there. Like, you don't even, what? You're just throwing money at it and you're like, now go. You know what I mean? It doesn't make any sense. Now, my buddy here, I'm not going to mention his last name. My buddy here, Jake, he has a reason. There's dark pool. And he's getting a little bit advanced, and I like that. And it's right before earnings. So I like that he sees that there's something going on. There is a reason. He's not just randomly throwing money in for earnings, right, to play the earnings. He sees dark pool prints and PayPal's down overall, as we can see here. This is of all of 2022 and 2023. It's down. Why? Because of interest rates. And I do believe this thing could really take off when Powell cuts interest rates, which I do believe is happening because he says it's going to happen, right? They'll give you a cheat sheet. He said he was going to hike rates, right? Right? And it was in September, or it was somewhere around here. I think it was in September. We are going to hike interest rates to combat inflation. What will that do to an interest rate sensitive stock? It's going to send it plunging to the ground, right? He told you he was going to move it down. He also said he was going to move bonds down because the yields were going to go up. They run inverse. Yields go up, right? The price of the bonds go down. Yields go down, price of the bonds go up. Very easy. Very easy. Could have played an inverse bond fund like what? TTT? Banger for 2022. Powell told you what was going to do. And what's happening next? I can give you guys if you all want to see what plays I'm in, you can come in the Discord. I'm getting off topic here. So anyways, what would be better, in my opinion, right? Now, Jake had a reason to get in, something that could potentially drive the stock up. I like that. And what do I believe could potentially drive PayPal up? Right? Even though PayPal is in trouble now, Stripe's going to be IPOing, all that noise. Who knows when Stripe's going to actually IPO? But anyways, a play that I would like better would be if you wanted to be degenerate and go in naked. So he had how much money here? He had $4,600. Okay? $4,600. So he could have bought pretty much, he could have bought four of these. He could have bought one of these and then maybe some Coinbase calls for the Bitcoin halving, and then some TLT calls for the fact that we're going to cut interest rates, which could potentially, possibly, send bonds soaring. He has the money. He has something with a probability, especially bonds, that are, if they cut interest rates, there's like a 99% probability, in my opinion, doesn't mean that's true, that they're going to rip. Why wouldn't you take that if you have the money? Why wouldn't you take something with a probability that high? Now, there's a ton of interest rate sensitive stocks, and I can do a video on that are going to react with interest rates. I can go on and on and on. And I'm not saying Jake in this scenario, but people are buying stupid crap. Really dumb stuff. They'll just be like, I don't know, Neo. And it's like, why? Do they have delivery reports coming? Are you going to play the run-up but not the report because you never play the event and dump it on the people that do? And then there's premium crush. And what? They were good and it went down. Yeah, buy the rumor, sell the news. You don't understand that? But I'm getting off topic again. A nice play could have been PayPal, right, for 2026. You had the money. Could have bought four of these. And he also could have, what's PayPal at? $55. A better play would be right here. He also could have turned it into a very wide debit spread. What is these? The 60s and the 80s. Okay? Per spread, max loss, instead of it being 4,600, you can lose all of this. 100% of it is now 623 max profit, $1,300 per contract. If you want risk, you can keep going. You could go even wider. They don't sell higher than 95s. You could have done the 95s. Max loss, 885. Max profit, 2,615. So now, because we're receiving money back, that's 455 minus the money out here. This is only $900 a spread, but that's really wide. That's kind of crazy. We can go with the 80s instead. Now it's 600. I could buy 2 or 3, and then I'd be able to trim some on the way up, right? And wait for the rate cut cycle to end, till they're done cutting interest rates, right? Sell, if I bought 3 and Powell says, hey, we're going to be cutting interest rates, interest rate sensitive stocks start to run into that event. They're not going to do it at the event. They're going to do it before. Remember during COVID when everyone was buying puts? Well, supply chains are down. Why is the stock market going up? Because they're not going to be down forever, and they're pricing that in. They're not going to wait. Everyone's going to be like, what? It's going to end. I better buy now and not wait because then it'll, right? People don't understand the logic behind it. No, the market is not rigged. You don't understand it. Okay? So that would have been a really good play. Now Jake has a ton of capital left, and he can go find another play. With that $4,600, I mean, he can get in like 5 different plays here on things that are low. Right? What's one of the most easiest ones? I wonder what will happen. You guys need to learn bonds. You really need to learn bonds. The reason I'm being so sarcastic here and a little bit offensive is to grasp your attention and to shake you to your core. If I come on here with a monotone voice and I'm very technical, it's boring. I don't learn like that. I'm teaching you guys how I like to learn. Maybe you don't like to learn like I do. But anyways, what happened? We went to quantitative. Oh, look at that inverted head and shoulders. Come on. We continued to cut interest rates. So in fall of 2018, we hiked interest rates, right? And then we ended up cutting in 2019. Then COVID happened, and it priced in the fact that we were going to cut interest rates. Interest rates went down. TLT went up. Then TLT knows, right? People know that rate hikes are going to have to come because interest rates are too low. So it starts pricing that in before it happens. Left shoulder, head, right shoulder. There was even technical analysis. This was a setup of a lifetime, and it collapsed. To what? Basically, lifetime lows of the fund. I'm already in. I'm in deep. We cut interest rates. It's going to go up. It's pretty simple. Why not something with a high probability than something with a low probability? Right? A lot of it is the adrenaline rush. I get it, guys. You get that rush like, oh my God, it's very exhilarating. And a lot of it is that, right? 95s. And then I can sell a call with the, let's just say the 110s. And that's very wide, and I'm leaving myself open to a lot of theta decay. The tighter I go, the closer in, the less theta decay. So $490 a spread. $625. I could even go naked. I could just have a call. I could have a call even in the money. Even at the money. Right? And if it starts to shoot up, well, I'm already green on this one. I can then sell a call against it. And then if it sucks back, I'm still green on this one, and I'm green on this one. I'm green on both. And I'm also hedged. And I'm also protected against some theta. More the tighter I go. That would be a smarter play. It's about probability. Earnings have a low probability. It's all about probability. It's a game of probability. So to wrap this video up, I would have rather used this $4,600 in capital for over a half hour, maybe an hour. I could explain where I would put that and why with what events are coming up. And you guys need to start off understanding fixed income, right? Bonds and the Fed. From there, those are the gears that turn the hands on a watch, right? The watch is the S&P and the equities. Learn that first, then we can move into the other stuff. Because, I mean, the amount of opportunities coming up here are going to be crazy with what's going on. So I would not have done that to play earnings because it has a low probability, and I would have used that $4,600 spread out with very good, highly probable plays for about a year and a half out. If you guys like this content, make sure to like and follow for more. DM me if you want a trade review.